I got to tell you, I really enjoyed the last Gains episode, learning about NFTs. If you haven't heard it and you're interested in NFTs, hey, go back to the last Gains episode. I really enjoyed it, and I'm sold. I really, really am high on NFTs and see the value, utility, and so forth. Meanwhile, we've been talking a lot of Russia and Ukraine. Yeah, it's tough stuff over there. We've talked about markets. Chuck Carlson, the Dow theory is bearish right now. Technical analyst Jim Welsh sees some further downside to the markets. So I think it's time to talk crypto again and maybe even start taking a look at the high flyers that have been decimated. So we're going to turn our attention back to crypto, growth stocks, some of the unloved parts of the market. I'm Andy Gersher, and this is Gains. Let's turn our attention back to crypto, back to some of those high growth names we have talked about in the past, and we're bringing on Bill Ulivieri, owner of Cenacle Capital Management in Glenview, and as always, the website cenaclecapital.com. That's CENACLE Capital, CAPITAL.com. Bill, always good to have you on the Gains podcast. How you been?
I've been excellent. I mean, this has been a lot of fun, and I really appreciate you having me on again today, Andy.
Yeah, I had Bill on the noon business hour today. We were talking about how crypto is right at the forefront with Russia's invasion of Ukraine. Ukraine's getting crypto from all over the world. They've just goosed up their crypto market. And that's actually what I wanted to start today's Gains podcast. We had Bill on the noon business hour today doing a segment on Russia, Ukraine, and crypto donations to Ukraine. And right before Bill went on, he actually looked into this and may have made a donation as well. So let's just start there real quick before we go deeper into crypto today, Bill. You went and looked into this. You made a couple little donations, and also right before we went on, you told me you could, if you have Doge, you could even get your Doge to Ukraine. So let's just start there. I mean, what did you find? Okay. You were making donations while you were on air with us earlier today. So let's start there.
Absolutely insane things are going on, Andy, and I'm jumping out of my seat in preparation for the interview, not only with you here on the Gains podcast, but also as I was preparing for the brief interview on WBBM today. So here I am going to talk about cryptocurrency and Ukraine and Russia. And I decided to go back, and I remember Satoshi Nakamoto, the inventor of Bitcoin, saying in 2011 that when Julian Assange was basically arrested, he was shut down by the U.S. government because they didn't like his website, the WikiLeaks, which had posted some very embarrassing information and content about the U.S. government and the war in Iraq. And I don't want to go down to the political hole there, but I found it really interesting is that Satoshi Nakamoto was worried that Bitcoin might achieve too much attention, might receive the bad publicity and bad press, and actually, become this the target of the government if you could make contributions to political dissidents or political enemies of the United States. And so I know that, PayPal, Visa, MasterCard, his bank, I think Julian Assange lost access to all his financial freedom and his accessibility. So what happens? All these people, they're in favor of freedom, in favor of Julian Assange, and I'm not making a statement either way on what he did, but they were able to send him Bitcoin, and he was able to survive on that. And as a matter of fact, he was actually having the conversation about a digital cryptocurrency back in the 1990s. Apparently, he was part of the cypherpunk movement. So he was really into the space. So I wanted to talk about that because here we are, 2022, Andy, how quickly things changed. Because in 2013, 9 years ago, I had done a consulting gig in London, and it took me 28 days to receive my consulting fee using a bank wire transfer. And the London Stock Exchange kind of screwed it up, and I made a mistake, and I didn't tell my bank in time, and so it got lost in the shuffle. Now this is from the UK, Andy. I mean, we've been doing business with them since like before 1776. And it takes a month to receive a wire transfer. So I thought it'd be kind of cool, just in the spirit of freedom, if you want to call it that, in the spirit of cryptocurrency, is while I was on hold, I'm in queue about to do that podcast, the interview today, and I load up my cryptocurrency wallet. I get the address of the cryptocurrencies at Ukraine that the ministry, the digital transportation minister, receives these tokens, and I find out that they received 12 different cryptocurrencies: Bitcoin, Ethereum, Cardano, Doge, US Tether, both the ERC20 Tether and the other Tether, I can't forget which chain that's on, and about in about 6 other cryptocurrencies. So it blows my mind that just when the host of the radio show introduces me, I hit send on my cryptocurrency wallet, and I send a $10 donation in Cardano to the defense, the Ministry of Digital Transformation in Ukraine. And it just, my mind was blown right there, because it took 20 seconds for me to do this, and they'll have the money, the value in the account using the internet, cryptocurrency, in a matter of 2 or 3 minutes.
At a low cost, by the way, too. At a low cost, I think you mentioned, being in foreign currency in a previous life, you had exchange fees, bank fees, the amount of time. The example you were using from the UK. Now it's instantaneous, and how much? It probably cost you pennies, huh?
It was about 4 cents, if I remember, no more than 14 cents to send. And it wasn't, it's a small donation.
But still,
Andy, you got to remember, when I visited the UK in 2013 and I landed in Heathrow, I had $100 and I needed to get British pounds. Well, the spread, I got like $52 of I was completely taken advantage of.
Especially over-the-counter retail, especially in an airport, the spreads are huge. Look at the difference between the buy and sell on the pound. Let's call the pound $1.30. It may cost you $1.45 to buy the pound, and then when you return them back, you might only get $1.20. The spread's huge on those, even on a major currency like pounds. Huge. And that's where they make the money, by the way. I had been in the industry, and then there's also fees on top of it, and sometimes there's even a percentage fee as well. Oh, just real quick, because a lot of us Gaines listeners, part of the Gaines Nation, a lot of us in the Gaines Nation have crypto. We have wallets. We have Doge, Bitcoin, Ethereum, so many different cryptocurrencies. For the Gaines listeners who want to help Ukraine out, explain where you went and exactly what you did to make that happen today.
Well, all I did was a Google search for cryptocurrency plus Ukraine donations, and I found the link to the Ukrainian, the Ministry of Digital Transformation. I just clicked on the link, and it's a very friendly, easy to follow web page, and they have all the tokens listed there on the right-hand side. Again, they were not in alphabetical order, but Bitcoin and Ethereum was first, and below that was Dogecoin, Cardano, maybe Avalanche. I don't remember all the cryptos off the top of my head. There were a few that I've never even heard about before.
Which one did you send? I'm just curious. I
sent Cardano just for
good man, good man. So send Cardano, okay, to fight the good fight in Ukraine. I'm down with that. Maybe a lot of us who are in Doge. You mentioned that Doge was on that list. Maybe the Doge Army, maybe the Gaines Nation and the Doge Army come together here and help Ukraine out. So super interesting. And then this all happened really quick.
It happened again. I got the idea when I was on hold, Andy, and by the time I was already beginning to get introduced, the Cardano was already sent on its way, and that to me was just such a stark contrast of what I've lived through in 2012, 2013, going to London. It reminds me recently of what happened to the Canadian truckers in Canada in the protest where the Canadian government was able to shut down the GoFundMe page for the protesters, and allegedly, they were going to donate $3 or $4 million to the charitable organizations of their choice. So the idea of retaining where freedom and money are so intimately connected. There's never been more intimately connected than it is right now in 2022.
The Canada thing really opened my eyes. I've always been a big fan of Canada. First of all, I realized in a big way, I always just assumed, it's just another small United States. It's not. I realized that they certainly don't have the same freedoms that we have here in the United States. It was amazing. The U.S. government doesn't generally go around confiscating money, especially from an organization like that. I mean, it really opened my eyes to cryptocurrency because it just speaks to what you were talking about. They even talked about they were going to crack down on crypto. I'm not quite sure how they think they're going to do that since it's decentralized.
I'm not sure.
But, yeah,
they've got the entrance and exit ramps would be my guess. And here's a woman that just donated $20 out of the goodness of her heart. I mean, she was like a waitress or something. I'm not sure what she did. And then everybody came crashing down on this poor woman. She's like a single mom, donated $20 to the Canadian truckers. And now she lost her bank account.
That's happened. I've heard the same thing. They've returned some of them, some of the smaller ones. But again, Canada, you don't have the same freedoms that we have here in the United States. And I always kind of just was like, it's just like because Canada's a great country. Toronto's a great town. Quebec, Montreal, Vancouver. I mean, it's a great country. And, just being there a lot, I was always like, this would be a great place to live. It's just like a mini United States. And then that really opened my eyes, that event on both, this isn't the United States. The United States, we really do have some special freedoms that most places in the world don't have. That opened my eyes. And then the cryptocurrency portion of it that you brought up opened my eyes. Mm-hmm. So it's certainly another example of, how this all fits. Shifting over to talking crypto at large, when we talked earlier this morning about what we were going to discuss today, crypto's gotten beat up, no doubt about it. And we wanted to talk about that. But there is some light at the end of the tunnel. I know you and I both agree that a lot of these projects, the majority of this stuff is still going to be around 10, 20, 30 years. It's just starting. We just did a recent podcast on NFTs. That's just starting. And the long-term growth of this stuff is, there's a ton of potential here. But we have seen a pullback in crypto as we have seen with stocks. And that kind of brings us to our conversation. Right. You went and delved through a little data, Bill, and tell me what you came up with.
Okay, so I'm just going to have to get a little extra runway with this one, Andy, if you don't mind. And that is, so, you and I, and when I talk to my clients as an investment manager, they talk about, we talk about the market being up 500, the market being down 400. S&P up 2%, NASDAQ up 3%, or whatever. Like what does that mean? It means more than what meets the eye. And so if the market's up 500 points, what is it? The Dow Jones Industrial 30, right? The Dow 30 has 30 stocks. It's a price-weighted index. And honestly, it's in my opinion, kind of an outdated way of measuring economic health, right? 30 stocks of what we have out there. The S&P 500 is a capitalization-weighted index, the S&P 500. And that's got, again, 500 stocks. Maybe there's actually 502 or 510 stocks in the index. You've got the Russell 2000 value, and the Russell 2000 growth, which is 2,000 stocks with a market capitalization of somewhere between $2 billion and, say, $8 billion or $10 billion. And what does it mean when you say, the technology was up today, right? That's the NASDAQ 100. Is it the over-the-counter market? So the NASDAQ 100 has 100 companies, and the over-the-counter market, I think, represents 3,500, maybe 4,000 small OTC companies. So again, what does it mean when we say the market's up and when the market's down? And so as a financial advisor, I had to grab my arms around that. And what I've learned over the years is that there are 4 broad S&P 500 sectors. Okay, so I don't look at the Dow. The Dow to me means nothing. But if you look at what's underneath the market, if you say, well, what kind of parts of the economy are represented in the S&P 500? Well, there's 40 of them. There's aerospace, auto and parts, banks, biomedics and genetics, building, chemicals, computers, electronics, healthcare, gas utilities, gaming, finance, and I can go on and riddle off the other 20. Steel and iron, software, semiconductor, savings and loans. I mean, it's a really interesting way because like an iceberg that you're looking at the top of the water, the iceberg really just represents the S&P 500. And what we know about icebergs is that 90% of their mass and the danger is underneath the water level. It's underneath the sea level that the surface, and you don't even get to see. So we are saying, oh, the market's up 2%. Oh, the market's up 5%. Oh, the market's up 12 points. We need to drill deep into the S&P 500 to say, well, of that 500 points or of that 17 points that were up, what's up? Is it transports, steel, oil, electric utilities, internet, drug stocks, healthcare? Like, we don't know. So I find it really interesting that we can now take a few steps back and say, well, is there an easier way to look at what it means to be an up market? And for investment advisors, I think the first answer is most stocks are comprised of two asset classes, two classes called value or growth. Value stocks are those generally have large market capitalizations. They pay a dividend. Companies like Philip Morris, GE, IBM, Ford, like we could say that those are all like value companies.
And by the way, we've recently seen a shift to value companies as of late, and they've held up a lot better than the next group that you're going to bring up right now.
All right, so value. So this is the Invesco Pure Value ETF. The symbol is RPV, like Robert Paul Victor, and in it is Prudential insurance company, Prudential Financial, Cigna, MetLife, Archer Daniels Midland, WestRock, Lincoln National Corporation, Marathon Oil, Allstate, and about 35 or 40 more companies.
Some of the names that we had done a dividend show, I don't know, a couple months ago, and a lot of those names just secure, strong companies that throw off dividends. They're in very stable markets. So is that a good vehicle that you often look for value, that RPV?
Well, I do, but I'll tell you why in 1 minute. Okay. Right, and that is I'm always comparing value with growth. And growth companies would be like NVIDIA, Tesla, Signature Bank, believe it or not, Fortinet, and I'm not even sure what Fortinet does, but it's 3.5%.
Basically, degenerate gain stocks.
Okay,
yeah, that's what a lot of us have been in. You're talking, right. Tesla. You're talking, the growth, Lucid Motors, that whole thing.
Right.
The high flyers that we saw just run up for years and years and years. Go ahead.
But Etsy, AutoZone, Apple Computer, Oracle. These are companies that generally do not pay dividends, and they retain their earnings in order to grow the company. So that's growth, and then they have value on the other side. And this is what I want to get to. So I did a study recently with Bitcoin and asking myself, what is Bitcoin? I used to think it was digital gold.
As did I.
It was a currency.
Everybody says that too. Like, oh, this is digital gold. This is another asset class. This is going to move in a completely different direction. And you and I have discovered something different.
Yes, we have, haven't we? So we learned that. So I learned that gold really has gotten. I mean, we had a brief, like 1 day rally to above $2,000 $2,000 a share. An ounce. That's right. An ounce. It's probably back down to the low 1800s, maybe high 1700s. And the 1800 even, I think, is where it closed. Here's an interesting paradox. Is I decided to take a look at the value versus growth component and see when they are in sync with each other and out of sync with each other, and compare it to the bull market highs and lows in Bitcoin. And I thought that would be an interesting study because this is the creative part of investment advising that I love. So I went back to 2003, right? That's at the end of the dot-com bubble bursting.
Okay. And
I'm looking at a chart right now. Again, it compares value to growth. On August 23rd, 2004, value funds had I ranked the scores according to 0 to 6. Okay, 0 to 6. 0 is a horrible score. 6 is the best. On August 23rd, 2004, after the dot-com bubble burst, we pretty much put a low, I think, in March of 2003, if I'm not mistaken. But anyhow, growth funds scored a 0.39, where value funds scored a 4.0. So value funds were way, way, way above in terms of their health and their participation in the market in 2004. Growth didn't do well, where value really shined. Then in 2009, when the market, the Great Recession crashed, we had both growth and value kind of get thrown out with the baby in the bathwater. But let me just say that value funds scored a 2.0, and growth funds, again, had a sub-01 of 0.54 as a score. So growth was way, way underperforming value in September 2008 and 2009. We saw the same thing happen, Andy, actually during the COVID crisis, and this is what brought it to my attention. During COVID, value stocks got absolutely slaughtered with their score going to 0. There was not one value fund was positive in my world, where growth was almost a 2, or a score of 2. When the post-COVID recovery happened, we saw a huge rally in value, but we saw even a bigger rally in growth, almost to the point where it had never been higher since the internet bubble in like 1999 and 2000.
Right.
That just happened 2 years ago. So Bitcoin made its high right around the time growth as an asset class made its high. And it made a low right around the time the market made a low in the spring of 2020, when growth had a score of maybe 2 out of a possible 6. So what I did was I took this chart that I'm looking at right now as I talk to you, and I put a little dot on the chart on the time period where Bitcoin made a high and when Bitcoin made a low. And what I've concluded, and this is a relatively new study, what I concluded is in 2 things. One is Bitcoin may or may not be digital gold. It may or may not be a currency. It may or may not be whatever we want it to be. But one thing it most certainly is, and that is its growth. It acts like a growth component. To me, it's very, very obvious from comparing Bitcoin high and lows with growth in value high and lows. And then I can just maybe say one more thing about that is you and I use the terms risk on, risk off.
Right.
Risk on means we're in the market, we're in the Qs, we're in double beta funds, we're in the Russell 2000. What we're not in is we're not in bonds, right? We're not in money market. We're not in short-term bonds. Risk on, risk off. So I think we have to conclude, at least until further notice, that Bitcoin is risk on and it's growth, not gold or quote-unquote value, like a defensive asset class you go into during times of fear.
And that goes for all of crypto, because they kind of the bulk of crypto. I mean, there's some outliers. Go lockstep. You know, Ethereum and Bitcoin move pretty lockstep. So it sounds like you've discovered that it isn't that asset class like gold would be. This is growth. So when growth is peaking, probably a good time to maybe take some profits on crypto if you want to. Right. Now, on the other, go ahead. I'm sorry.
No, that's where we're at right now, Andy. And I didn't mean to cut you off. I apologize.
No, that's okay.
But the growth as an asset class score is 0.3 out of a 0 to 6.
So now it's buying time. It's nibble time.
What does it tell you, Andy?
Yeah, it does. Now I'm always a believer in dollar cost averaging in Bitcoin and Ethereum. That's actually the play long term. But maybe the biting is a little more. Now here, I'm going to throw one other little thing in here. Let's just go to eToro real quick here. You know, looking at some of the crypto, I mean, it's really gotten crushed. A lot of really good projects, you know, even Ethereum, Bitcoin. I mean, obviously, SHIB and Doge. And it's tempting. Seeing some of the prices here is really, really tempting. I'm just going to throw some stuff out there. I've liked Uniswaps. They're down to like $9. But let's talk, more mainstream stuff. Bitcoin, you're right at 40,000. Ethereum's about 2,800. You know, that's it looks attractive to me. So then my other little slice here is The Dow theory is bearish right now. I think the market actually has further downside. We talked to Chuck Carlson about that a lot, about the Dow theory, and I'm a big believer in that. And my technical analysis guy, Jim Welsh, Gaines listeners know Jim, he sees some additional downside potentially coming as well. Will they continue to fall if that growth gets hit a little further? And I know they've given up a lot of ground already.
Sure.
Is it too early, or what's your feeling of that, especially in light of the Dow theory and some of the technicals that we look at on the chart still being pretty bearish?
Well, I'm going to have to listen to the podcast about the Dow theory because I remember being introduced to it back in the 80s. But I really can't. I really don't know that much about it, to be honest with you, and I'm going to have to look into it. Andy, this is really a tough call because I could kind of see where, this rally that we've had in the last couple of days could be a bear market rally, a reactionary thing. At the same time, I am compelled to look at the value growth scenario. So it seems to me that if the market goes down, the fund scores of all the growth components that I look at, it can't get much lower. It's almost at zero now. So all I really need is for growth to stop going down and just stay here. And I'm sure that I'll see the growth component begin to uptick. And this is what makes a market. I've got a Dow theory guy over here. We've got a value growth guy over here. We have a technical analysis guy over here. We've got interest rate people over here. So I'm not sure what to make of it other than we are all looking for guideposts. We're all looking for a compass to help us in our directional trades and in where we take stands. And all I'm saying is I find it interesting as a contrarian that everybody's talking about value. Everybody's talking about this next 10 years of commodity prices and higher gas prices and all that stuff. And yes, I can't deny that we've seen some obscenely high prices. But what if growth really has kind of hit a bottom? What if the stocks inside Catherine Wood's ARC Innovation Fund, which are down 50, 60, 70, 80% from their high 2 years ago when growth peaked at this chart, what if it's in? What if the low is in for growth? And any decline we see is actually going to be in the value component. We could see that. You could say that the S&P 500 is probably more value than it is growth. So maybe we see the SPOOs fall, but the Qs not go much lower, or maybe we see the SPOOs fall, S&Ps, when I say SPOO, SPU.
Right.
So it's just this slinky that goes back and forth of asset classes. You've seen the bond market lately. My gosh, these bonds totally anticipated higher interest rates. There's not a bond that I have that's positive, except maybe some floating rate notes in the last year. IEI, HYG, LQD, which is the high yield bond funds, have all gotten slaughtered. Well, maybe when things open up and maybe COVID's not so bad, or maybe we don't go to war in Russia, Ukraine, maybe things get better, right? God forbid. We actually have positive about economic and world outcomes. What if things are okay? What if this is just a typical midterm cycle where we see the market pull back, as we've seen almost every presidential 4-year cycle, where the market gets hit in the beginning of a new administration, usually makes a low by the second year-ish, and then we rally to brand new highs by the fourth year. Like, there's a lot of things at play here, a lot of things, Andy. And I can't put my hat on all of them, but there's a few I like. And I kind of like this graph that I discovered because I'm the only one that knows that I discovered it. So for now, I like it because it's mine, right? I'm the only person talking about it right now.
Well, and that makes it even sweeter. And you probably, Gaines listeners have sensed this. We're always looking, what's going to happen in 6 months? 6 months, what did we talk about 6 months ago? You and I were talking about the shift to value when things were starting to peak. Right. 4 months ago, we were talking about how Russia will probably invade Ukraine and the moves that we're going to see in oil. You're not buying the stuff now. I mean, we've seen everything move. I mean, on energy, there may be further upside, but we'd even seen a pullback from those recent peaks. So again, I'm tracking with you because you got to look at not where you are, where you're going. We've seen growth get massacred, especially a lot of those high flyers. I mean,
Oh my gosh.
massacred. So,
I'll go over some of those with you. I have them right here in front of me. So
and we'll do that right when we get back from a quick break. Hey, really quick, be sure to subscribe, follow, leave us a 5-star review on Apple Podcasts. That's, I've been told, podcast gold. And then, hey, as always, subscribe and turn on those notifications so you know when a new episode drops. We're going to take a quick break, and we will be right back with Bill Ulivieri, owner of Cenacle Capital Management. We'll be right back.
If you enjoy learning about communities, culture, and history, then Shades of the City podcast is for you. We will bring you stories like the legacy of Johnson Publishing Company, most notably known for Jet and Ebony magazines.
Basically, what the world said African American people could not do, these magazines proved otherwise.
Subscribe now to Shades of the City on the Odyssey app, Apple Podcasts, or wherever you get your podcasts.
Back with Bill Ulivieri, owner of Cenacle Capital Management out of Glenview. The website, as always, cenaclecapital.com. That's CENACLE, capital, CAPITAL.com. Bill, you know, it's plug time. Throw in your plugs while we have a second here.
Sure. Well, we are bridging the gap between traditional investing and digital assets. We have a Spotify podcast. We write a newsletter. We have the website. So for people who want their IRAs or 401ks managed with a special eye and love of cryptocurrency, we would love to have that conversation with you, with anybody. So CenacleCapital.com, or call us at 847-686-4800. We can do a Zoom call and see if digital currencies are something, and these value growth plays are something that might benefit your accounts.
And, you know, it's nice to have somebody, if you have a money manager, that they're aware of things beyond just bonds and stocks. I just got to throw that in there. I like forward-thinking people who can, expose you to some of the stuff that's going to be very real in our future. Okay, so you were going to, before we went to break, let's spit out that list. Let's just kind of pick up the conversation there. Go ahead, Bill.
So there's so much to talk about, Andy. All right, so the first thing I want to say is when we were, just to go back with the cryptocurrency sent to Ukraine, one of the three organizations that helped facilitate this transfer, one of them was FTX. That's a cryptocurrency exchange. They just advertised and spent like $12 million on a Super Bowl to have the FTX advertised just here in the U.S. So here we have an exchange, the FTX exchange. What if the same thing happened with the Board of Trade or the Mercantile or the CBOE Options Exchange? It would be huge news that they sponsored and helped Ukraine. But I didn't really hear anybody talk about the FTX exchange helping Ukraine facilitate these transfers. Second thing I want to talk about is growth. Here is everybody in my world is talking about the Catherine Woods Innovation Fund. The symbol is ARKK. It has about 70 stocks inside. Here is their 1-year performance, not year to date, since January 1st, 2022, but going back a year from today. Skills down 90.55%. Berkeley Lights down 88.05%. Invitae, a genetic biomedic company, down 81.7%. DraftKings online gaming down 72.71%. Teladoc, Zoom, Roku, Zillow, DocuSign, Palantir, Spotify, all these things are down 55 to 70% in the last year. So maybe if you're only following QQQ, the NASDAQ 100, it might not seem like such a big deal. That growth maybe isn't down as much as you think it should. But I am telling you, man, just like I use the analogy of when you're looking at the iceberg, how maybe the QQQ is what you see above the surface of the water, but all these other companies have gotten, like you said, absolute carnage in these over-the-counter technology companies.
Hey, and real quick, Bill, real quick, just I don't want to get too far away from it. Yeah. I'm sure a lot of people have heard about the ARK Investment Management and Kathy Wood. But for those Gaines listeners, and again, she's had a track record up until just recently where she's picked some real winners. But boy, like you just mentioned, real tough year. But for the Gaines listeners who aren't familiar with Cathie Wood and ARK, explain what that is real quick. I mean, you mentioned some of the stocks and the fund, but explain kind of who she is and the track record she has and her philosophy.
Well, Catherine Woods, I don't know that much about her personally, other than the fact that she has a group of innovation funds. She's a staunch, huge believer of technology, electric vehicles, and just what we've seen, I think, as a generation. I mean, it's just amazing what we've seen happen in technology in our own world, whether it's working remotely, whether it's electric vehicles, charging station, Tesla, the SpaceX program. I mean, it's crazy. And so, Catherine really, as a manager of an exchange traded, as for more than one exchange traded fund, she has 6 funds that she is in charge of. One, she has a genomic revolution ETF, an innovation ETF, a Web 3.0 or 4.0 ETF, one called industrial innovation ETF, 3D printing, and then the ARK Israel Innovation Technology Fund. So she's all tech. This is her thing. And her assets under management went from just a few $100 million or maybe a couple of billion in the beginning of the great rally of technology. At the peak, I think she had maybe, what do you think, 80 billion of assets under management? I'm not even sure what the all-time high was. Like, we could go back and do some work, but she was able to attract massive amounts of assets under management, namely because she was talking about Tesla and Coinbase and these other companies long before anybody else was.
Yeah,
so
the game-changing technology companies that are of the future. And she got in, in all, we're talking about her recent, she had some recent issues because a lot of those growth stocks have been killed. But, to give her props, she was in a ton of these companies when they were just kind of a pipe dream.
Right, when nobody wanted them. Nobody thought any of this stuff was going to work. You're right. It was a complete speculative thing. And then all these stocks that were inside her ETF, again, Zoom and Roku, Spotify, Robinhood, these things just took off.
And the names that you're mentioning are, you use that iceberg example. A lot of these names are not even just S&P. They're a little smaller, a little more techy, and those are a lot of the names that are under the surface of the water right now.
But they're household names now, Andy, and they weren't at the time that she was buying them, which I find really interesting.
Yeah. Now, is she also getting in on new stuff as well? So, I mean, that kind of philosophy, though it hasn't worked as of late, when things turn around, some of the names that you've just talked about, really, there's a lot of upside potential, too.
Well, they say you live by the sword and die by the sword. And growth was a positive asset class for a long time. We saw, growth has been favored for quite some time. And again, Roku, Zoom, Coinbase, all these things, Andy, we could talk about this forever. But, I think the basic core holdings of the funds probably haven't changed that much. I just haven't quite figured out why the ETF went from $132 $132 a share to $52. I mean, it's just gotten smoked. And I think, again, it's interesting that when we talk about growth versus value, NASDAQ, QQQ 100 versus S&P or Dow, there's a lot more happening under the surface than people are normally aware of. And that's why we need to be aware of it, because I think the opportunity is going to come from names like these that are down 70, 80, 90%. We're going to look back on this. We're going to revisit this, Andy, in 3 years, when things turn around, when growth picks back up again. And we're going to be like, oh my gosh, why didn't we buy Roku at X or
Coinbase, Roblox, Coinbase. I mean, you look at, and even the likes of, Meta's been roughed up. Roblox. Twitter. How about Roblox? How about one that is kind of one that I'm kind of eyeing right now? Ticker SPCE. That's Virgin Galactic Holdings. That's another one.
SPCE?
Yeah. SPCE. Got it. Virgin Galactic Holdings.
Got it.
It's actually ticked up a little bit as of late. You know, it got roughed up and actually has moved.
I like it.
But I still love that. And those are the kind of those are the kind of stocks that we're talking about right now.
Absolutely. So year to date, Virgin Galactic Holdings, Sam Paul, Charlie Edwards, SPCE, is down 40.28% year to date. I see the high again in 2021 at roughly $62 a share. Now it's trading at 8.5. Oh my gosh. What? So Virgin Galactic's going away? These names are going away?
Nobody's going to go. There's not going to be space tourism like we've been kind of eyeing. That's not going to happen now all of a sudden. See, that kind of puts it in perspective. And unless you need money right away, getting in these, and even if it goes a little lower, the long term on some of this stuff is really attractive. Another one that hasn't been beaten up so much, you mentioned it earlier, NVIDIA. NVDA. We're not going to, crypto is going to die. We're not going to need those chips. Video games. You mentioned Cyberpunk. That's a great video game. You know, there's not going to be more of that where we're going to need gaming chips from NVIDIA. So yeah,
no more gaming chips.
No more gaming chips. Yeah. That's not part of our future.
Video screens. Yeah, no more graphics cards.
We're going back to horseshoes, right? Is that we're going to play horseshoes and
start growing
darts?
hay right now?
Right. So no, and that's a great point to make, and I'm glad that we've waited a little bit for some of this stuff to continue to get, rocked, to say the very least.
Right. And the NVIDIA technology powers Tesla cars.
Right.
It's their chips run the self-driving automobiles. So
speaking of Tesla, that's another one. I mean, Elon Musk was forced to sell some of his shares for tax reasons, that kind of thing. I mean, he wasn't selling it because he doesn't believe in Tesla. And so you even look at, like, Tesla's another one. And you just spoke to NVIDIA is making the chips to run the Tesla. So, I mean, what other ones? Give me a couple more. You're getting me excited here, Bill.
Oh, my gosh. Well, Andy, all I can do is look at history. And, I got into this business in 1980. We came off of high interest rates and high commodity prices. But we have in the last year, we have natural gas up 85%, crude oil up 46%, the S&P metals and mining ETF up 40%, lumber up 36%, and we have Bitcoin down 26% in the last year. We have the Russell 2000 down 12%. I could talk about. I'm just saying that the conversation is like, okay, growth is done. All we're going to now have is this inflationary economy for the rest of our lives. I don't believe that. I cannot accept that conversation. I refuse to do it.
We saw similar conditions to like what we're seeing now, kind of like in the 70s, like the late 70s. Then the 80s came. I mean, this stuff does turn around. I mean, I'm going to throw one more out there we had talked about too, sure. Coinbase. I mean, if you look at that, the ticker on that, COIN. I mean, look at that, look at Coinbase since the IPO. I think, if I'm not mistaken, that thing was, really took off, and now we're looking at 177. How can you not? Now, again, I'm looking at some of growth has come back a little bit, and I guess that's the big question we're talking about now is it a dead cat bounce, a head fake, or is there more legs, or do we see it pull back? But then, even if you bought something now and it moved a lot lower, if you help, like you said, in 2-3 years when we're having the conversation, we're going to be like, that still wasn't a bad buy. Right?
Maybe I didn't buy the low, but it was still. Listen, my friend Peter, who is an advisor to advisors on maybe $20 billion of assets under management, he says, even if I'm wrong, I'm right. Even if I'm wrong, I'm right. And I think that's really valuable because we don't really always know the outcome of our investment trades and our buys and the way we shift asset classes around. But if you could see the chart that I see, Andy, in the value versus growth, since March 9th, I've been selling value and buying growth for my own client portfolios. Am I going to be right? I'm not sure yet. And I don't want to say that it doesn't matter because it does matter. But even if I'm wrong, I'm right because I'm doing the right thing by rebalancing the account, getting rid of some value into growth, and we have cryptocurrencies on the low end of the range. We have growth stocks, as we've just talked about for 20 minutes, from the Catherine Wood, ARC funds, and even the stocks that are not in her fund are down between 50 and 90%. Okay, where do we go from here? Where are we going to take some chips off the table and put them someplace else? So, if investing, it can be like a pendulum swinging back and forth. We have value on the far right side of the pendulum swing, and we have growth on the far left side of the pendulum swing. And it seems to me that I could still have a 60-40 or a 70-30 or an 80-20 portfolio invested, but I want to tilt and lean that portfolio where it's going to give me the greatest odds of making money. And for me, today, as we speak, it's the opportunity is on the growth side because everybody hates it.
Yeah, and you mentioned you're a contrarian. So am I. We love to zig when others zag, and that generally works beyond just investing. I found that that works across the board, even in life. I'm gonna ask you for your 3 favorites in the growth area, and then we'll throw we'll throw a crypto in there as well. And so I'll give you mine first, so I can give you a second to put your list together. So these are all stocks that we've already discussed, at least on my end here. So the 3 though that I have been eyeing, full disclosure, and again, take my my picks for entertainment purposes only. But NVIDIA, the ticker NVDA. I like that one. And then we talked, I brought up, I really find this space exciting. And I think that's going to be really cool. And it's interesting, they're already getting the cost for some of this stuff down quite a bit. I mentioned that Virgin Galactic Holdings, the ticker on that, SPCE. And then I also, and this is in the crypto space, I really do like Coinbase right now. It's come back. I've been waiting for it to pull back, and that the ticker on Coinbase is COIN. And then in the crypto realm, like I said, as always, dollar cost average into Bitcoin and Ethereum, especially now. Maybe you put even a little more of that dollar cost into it. And then, I'm going to have a fun one as far as just a more high flyer. Sheep's pulled back. And if I would be buying a crypto outside of Bitcoin and Ethereum right now, I'd maybe play around with a little sheep. And then after my last conversation, one other thing is I'm totally excited about NFTs now more than I've ever been. I've seen some of the utility that can be used with that. So, I think I'm going to go pick up a Hungry Wolf NFT as well as a fun thing. And maybe even mint myself. They have like a cheaper version of Hungry Wolves, and I might fool around with that. They call them runts. That's what I was looking for the word runts. So you could the neat thing about, just real quick on the NFT thing, the Hungry Wolves. You have the Hungry Wolves, which is part of their NFTs, part of this collection. But a real fun, cheap way, and we talked about it on the last Gaines episode, is for about $15, and there's this is just to kind of get your beak wet if you're just playing around with NFTs. Is they have these runts, and they're unlimited, but it's a way for about $15 if you want to mint your first NFT. So that's just a fun thing. So I'm really high on NFTs after my last conversation. So I'll throw the Hungry Wolves in that mix as well. All right. So what do you got for us, Bill?
Okay. So on the growth side, for stocks, I tend to lean toward exchange traded funds. It's just cleaner for me. I feel better with the basket of stocks than individual stocks, although I do have one. So on the growth side, I like RPG, Robert Paul George. That's the Invesco Pure Growth Exchange Traded Fund. I do like the Catherine Wood ARK Innovation Fund, ARKK. That's ARKK, because it holds, she's really good at fundamental research and forward-looking innovation stocks, where I'm much more of a technician. So I'm going to lean on her fundamental expertise, but I'm going to choose the technical side of when to buy and sell. And then there is one company I do like. It's more than one, but I'm just going to share one. The symbol is SNAP, SNAP. SNAP is an internet company, and their business model, I guess you could say, their business model is to create kind of like, it's a formerly Snapchat. It's a camera company, but they have very, very creative tools, creative lenses. They offer third-party in-house solutions for advertising.
They add those filters, like they're that. Oh yes, like Snapchat and the filters. So that Snap owns Snapchat amongst other things.
Mm-hmm.
Okay,
right. So the reason why I like it is because I don't believe that social media is dead. Yes, Twitter's gotten hurt, Facebook's gotten hurt. TikTok has issues where everybody thinks that, I don't know exactly, there's some security issues on the TikTok platform, but I don't think social media is going away. Maybe Facebook is going to take a time to morph themselves into Meta, and maybe Twitter is going to have some issues after Jack Dorsey leaving and potential censoring of content. Maybe they're not really a news aggregator as we would like them to think, but maybe they were actually censoring some content in the last 2 years. So there's some concern here. But Snapchat or Snap is actually kind of interesting. I mean, to me, technically, the stock is down 30% year to date. Its all-time high was like in the 60s. Now it's trading about 32. Is that right? Maybe I have to double check.
About 34, just under 34 a share. I mean, it popped up probably in the last couple days. Right. Monday it was 28, and Monday it was 28. Right now at the close, it's just under 34. But still a lot of room to go too.
A lot of room to grow. So, the stock is high was $84 a share. And, when growth kind of peaked in late 2020, early 2021, I'm not saying the bottom's in. I'm just saying it's kind of interesting for a growth stock. In terms of cryptocurrency, I'll give you some of my favorites. So once again, I take all the cryptocurrencies and not all of them, all the ones I have pricing for, dump them into my analytics program. And my favorites right now for a trade are Zcash, Origin Protocol, OGN, Bitcoin, and Beam, BEAM. Beam.
Oh, Beam. We've talked about that a while back. Beam.
Oh, and Coinbase, the shares of Coinbase, COIN. I want to hop on with you with that one.
Oh, nice.
Because if you go to their website and you look at the About Us page, they have like 6 really interesting, profitable businesses. And if you want to own not only a basket of cryptocurrencies, because they invest in those, but also the pick and shovels of cryptocurrency, they're coming out with the NFT platform that already has 3 million people waiting to use. They provide business commerce like PayPal. They provide institutional trading like Fidelity or Schwab or Interactive Brokers, like on the institutional side. They've got developer tools, business tools, retail tools, an exchange called GDAX. I mean, I have to control myself when I talk about how positive I am on Coinbase. And so just know that don't let my enthusiasm skew a prudent investment in a speculative stock. But I am absolutely crazy for Coinbase. I love it. I love what they're doing. I love the company. I love everything about Coinbase. I'm sorry.
I know. I agree. And you know what? I'm glad you made an excellent point. And this is one of the reasons why NFTs look attractive to me. OpenSea is a big NFT platform. People secondary market, that kind of thing. I mean, you look at their user base is still relatively small. You bring on the likes of Coinbase and even get a small percent of those customers to jump in on NFTs. Oh my goodness. And like you just said, there's 3 million on the sideline in Coinbase that are ready to go and maybe jump in on this. I think I could be wrong on this, but I think OpenSea is like under 500,000, users there. So or players in that. So I mean, just imagine. I think a Coinbase on top of it being attractive. You look at the chart. I'm really high on it as well. It's only going to benefit from crypto, coming back. And then, like I said,
Sure.
I mean, that's why I think NFTs really have a lot of upside is, it's still tiny compared to Ethereum and all this other stuff that's kind of been out there and been adopted. I think that's maybe the next NFTs are the next space that I think is really going to take off. I mean, we've seen a ton of growth. And NFTs right now feel a lot like Doge was like a year ago, right before it was going to break out. And we often saw what helped Doge, what helped Sheep. You start putting them in other platforms. You get Doge on Robinhood, and that was a big game changer.
Right.
You get Sheep available on eToro. That's you just start seeing, because it gives a lot more people access to it who might not have before. So I think with Coinbase, not only are you getting a good deal, and you're in a space that is going to just get huge before, and then you also have NFTs and bringing NFTs to the masses. So I'm right there with you, Bill, on it.
Yeah. Andy, you said that too, and you and I were having a little sidebar conversation before you started recording. Is how traditional businesses will be able to monetize and bring a whole new layer of profitability to their business models. And so I just asked myself, if Coinbase is one of the companies that has a institutional commerce, business, and development tool platform, why wouldn't companies in the S&P 500 or Russell 2000, why wouldn't they engage Coinbase for their expertise and their custody and use them rather than just some other, a platform or another exchange? I mean, one thing's for sure is you got to say that Coinbase has got a lot of street cred as one of the few crypto companies that are listed on an exchange and have gone through the SEC hoops of, know your client and anti-money laundering rules. So it just seems to me that if NFTs are everything you believe them and I believe them to be, and NFTs are going to give companies a way of monetizing and their brand and bring on loyalty to their customers. Wow. Like what, I mean, I'm hypothesizing here what Coinbase could be, and this is all a disclaimer, right? Caveat emptor. It could be huge for them if, as a member of an exchange, they actually get S&P 500 work on their platform, right? Because they're pretty good with their user interface. It's not like you're going to some other exchange and buying an NFT.
And the street cred, that's a big thing. I think Coinbase then brings additional street cred to NFTs at large.
Yeah, I agree.
Yeah. So, and then just one thing real quick, I do think the Zcash is interesting. Do you just see extreme value there? What's the explain real quick, because we're going to wrap this up. Just a ton of good stuff. But as we're wrapping up today's podcast, I want you to just get in real quick how you have a way of looking at crypto and, going after stuff that's, unloved at the time. Kind of explain how you sort out your crypto and that Zcash, I by the way, I find very interesting. But explain that to the game listener.
So again, I use a lot of technical analysis. I use a lot of bell curves, statistical ebbs and flows of overboughtness and oversoldness, right? It's like this pendulum that swings back and forth in an old-fashioned pendulum clock. The far left is oversold. The middle, where the pendulum is at rest, is fair value. And the far right side is overboughtness. So again, just as I had mentioned before, the S&P 500 could be up or down on the day, but underneath that are 40 sectors that are their own thing. And they slosh back and forth, not just with every day the market being up or down, but they also slosh depending on whether it's a consumer staple or it's a technology company. Cryptocurrency is the same way. You throw all these things into a blender, you look at it using a standardized bell curve, and you'll see that companies on the far left side of the bell curve that are good projects that are oversold could be Zilliqa, Matic, STX, Polymath, Cosmos, Beam, Omisigo, Shiba Inu is on the left side of the bell curve.
Nice.
It's got a positive momentum, but it's been oversold. So that's like a sweet spot to take a shot on that.
Yeah, it's kind of why I like Sheeb, by the way. I'm right there with you. Oh, go ahead. Sorry.
All right. No, you're good. So one that is really oversold with positive momentum is one called Jasmy Coin, Jasmy. Now, here's one. The high was like 18, maybe 20 cents per token. That got down to a low is a penny recently. Now it's trading a penny and a half. Here is a crypto, and I don't even know what they do, Andy. I'm not going to lie to you. I don't need to know because traders don't need to know what it is to trade it. It's on the far left side of the bell curve. It's 100% oversold in its 10-week moving average. It's the furthest candidate on the far left side of my bell curve, yet it has positive momentum. So that would be a huge speculation, Jasmy. Zcash is a privacy token. It runs on, and maybe it's picked up some popularity with the Canadian trucker situation and what's going on in Ukraine. But Zcash is.
I'm buying it right now. I'm going to go ahead and buy Zcash right now. The ticker on that is ZEC. On eToro, there's a little built in. It's going to cost me $150 per token. So I'm gonna jump on that. Before let me just put the all right. So now
Andy, you're killing me. Do your due diligence. You just can't, you're a degenerate. You degenerate.
I am, and I'm looking at the chart here. How can I not buy it? I'm going to pick up Sheeb when we're done here as well. I like value, and I've been kind of waiting. So. Hey, you got to jump on, pull the trigger sometime.
The high in Zcash was $800 a token.
Yeah, I mean, how can I not buy it at $150? Plus, I've actually it was on my watch list as well. Okay. So what the heck?
Past performance is no indication of future returns. Let's keep that in mind. And
we're having fun here.
Having fun.
When I like investing. This is fun. I got, there's other things we talked about, some of the growth names. Well, here's the thing, and I'll justify it right now. I'm getting my Lumen dividend tomorrow. So that's basically what I did with my Lumen dividend. Lumen Technologies, LUMN. We get paid for the latest dividend payment tomorrow. So that's all I'm doing is taking my dividend that I'm going to get from tomorrow and putting it in Zcash. So we got to spread the love.
Oh, you are amazing. I love this conversation. And let me just close with this one thing, Andy.
Okay.
We were talking about Coinbase. For those who are option traders, you can sell the May 180 put.
Love it.
Do a cash secured put. It's 65 days to expiration, although Coinbase does have earnings on May 12th. And you can collect a 12.2% static rate of return. So if the stock stays the same or goes higher, you'll make roughly 12.2% over the next 65 days.
You mean like a cover call. So you're basically doing a cover call on your position to juice it up.
You're basically doing a covered call.
I love that. I love that technique. And, often using cover calls, especially on some dividend stocks. I mean, you end up by using your cover calls. I mean, you really can actually, you get the bang from the buck, you get the juice. That a lot of times, like I use that for dividend stocks because you're getting the nice dividend. And by using the cover call strategies, you end up giving a couple percentage points additional income. I love that. I love that trade. So your cover call, you're doing cover calls on Coinbase. Explain that real quick as we're wrapping up.
Coinbase. And hey, it's been hard, Andy. Don't get me wrong. I mean,
especially
Coinbase has gone from 250 down to 160. So it's been challenging, but I still believe in the long-term outlook of the company, and we're lowering our basis every time we sell a call in retirement accounts.
Oh, I like it.
Not that it matters the basis, but it's it throws cash into the account.
Yeah, I love that move. All right, so let's leave it there, and we'll just pick up the conversation next time. Real quick, Bill, why don't you end today's podcast with final plugs and your final thought?
Sure. Please subscribe to our newsletter by texting the word blockchain to 22828. That's text the word blockchain to 22828 to get started with receiving our Blockchain Advisor newsletter. And if anybody, again, is interested in having their IRA or 401k managed professionally by a registered investment advisor who has a great affection for traditional asset classes as well as cryptocurrency, to please give us a call at 847-686-4800 to have a conversation and see if we could do some of these things in your own account at the right time.
Big thanks to Bill Ulivieri. I really appreciate. Always have a great conversation with you, Bill. Bill Ulivieri, owner of Cenacle Capital Management in Glenview, and the website, as always, cenaclecapital.com. That's CENACLE capital.com. And then, as always, hey, be sure to subscribe, follow, leave us a 5-star review on Apple Podcasts. And then, as always, subscribe and turn on those notifications so you know when a new episode drops. Hey, one little program note. We are going to be dropping our Gains episodes on Wednesday and Friday mornings. And that's going to start next week. So just a little program note there. Hey, again, thanks for listening to the Gains Podcast.
A News Radio WBBM podcast powered by Odyssey.